Good afternoon. Thanks for joining us for our second installment of our statewide virtual town hall, brought to you by Colorado's Paid Family and Medical Leave program, known as FAMLI. We have a panel of experts here today to go over some prepared content, and then we'll take hopefully the majority of time to get to your questions. If you are joining by phone, you can press star 3 to be entered into the queue, and then we will answer your questions live. You're also able to submit a question online. Again, we do hope to get to as many questions as we can today, keeping in mind, I believe we have well over 1,500 participants, so certainly won't get to all questions, but we'll do our best to cover general themes of questions coming in to our panel of experts. Again, if you're joining online, you can also call in by phone, 833-305-1729. Press star 3 and you'll be placed into the queue. If you're already dialing in, press star 3 to ask your question. So today's agenda, we will go over what is FAMLI, a timeline for implementation, resources for small businesses, a quick update on private plans, calculating wages. A lot of questions coming in about folks preparing for family additions in 2023, so we'll touch on that, and then, as I said, get to your questions. So starting off, what is FAMLI? This is a voter-approved ballot initiative passed by 57% of Colorado voters in 2020. It provides for paid leave for workers to take care of themselves and their loved ones during certain life events, which we'll get to in a moment. The program will cover almost all workers in Colorado, including those that are self-employed. The FAMLI program's a social insurance program with both employers and employees contributing to the fund that will eventually pay out benefits in 2024. The premiums are shared, set to 0.9% of the employee's wage, 0.45% generally paid by the employer, and 0.45% paid by the employee. The initial FAMLI premium rate is fixed at 0.9% through 2024. However, similar to unemployment insurance, the division may adjust that premium rate depending on the fund solvency when a snapshot is taken of the fund at a certain point each year. FAMLI premiums are capped at 1.2% per statute. It's actually been demonstrated in several states that premiums have decreased and benefits have been able to increase over time. So who needs to participate in Colorado's Paid Family Leave program? Well, at a high level, every business must register. There are a number of ways you can interact with the FAMLI program, which we'll go over in a minute. Businesses with 9 or fewer employees do not owe the employer share of the premium. That's at 0.45%, but they are still required to register in the system. That means you're creating an account. You're submitting employee wage data quarterly, similar with unemployment insurance, and you're remitting the employee share of the premium. That's at 0.45%. We are encouraging all employers to register, as the first wage report and premium installment will be due April 30th. Now, taking a quick look at the FAMLI program implementation timeline. So as I said, quarter 1 of this year is when employers should be registering with the system. You can go to famli.colorado.gov to enter into the portal. The clock is ticking, as I mentioned, so it is important to go ahead and create that account if you've not done so already. Again, these are required to be remitted to the division by April 30th to avoid penalties. We are offering a 30-day grace period before any payments are considered late, but it's probably best business planning to go ahead, register, and prepare yourself now for the April 30th deadline. Registration takes about 20 minutes and can be done again at famli.colorado.gov, and you can navigate to the My Family Plus Employer button to enter the portal. with that, I will turn it over to my colleague, David. David, take it away.
All right, thank you, Cher. So let's talk a little bit about local governments. There's a big deadline coming up for local governments as well. Local governments are really the only employers in Colorado that are able to opt out of family participation. So if you're a private company, you have to participate. If you are the state of Colorado, you have to participate. If you're the federal government or a railroad company, you may not have to. Don't ask me why on the railroads. It has to do with Grover Cleveland, and we don't have time to get into it today. But if you're a local government out there, like the county of Jefferson, whose beautiful county building we see there in the picture, they are allowed to opt out. But you have to vote to opt out by March 31st. That is 10 days from today. If you don't do that, the local government is going to have to participate in the family program for at least 180 days. And regardless of whether or not you're opting out or not, local government employers do have to register with family. We have to know you're out there because we have to know if you're opting out or not. Now, if you work for one of these local governments and the local government has opted out, you do have the ability to still participate. And we're going to have more guidance on that as we get a little bit closer to 2024. But once you opt in to participate as an employee of the local government, you will have to commit for 3 years to be a part of the family program. So if we have any local government employers out there watching, and I think we are based on some of the questions I've seen in the chat, go to our webpage. We have a special webpage on the site just for you. It's called Local Governments, and it's underneath the Employers tab. So go ahead, go check that out, and make sure you get everything squared away before that March 31st date. So let's go ahead and move on here and talk about the other employers out there. So if you don't qualify as a local government, you have to fulfill your employer requirements. So we've been getting a lot of questions about family requirements for businesses with just a handful of employees. And that's why we created a new small business guide. If you are one of those small businesses, we've got all the information you need about counting employees. It's more difficult than you think, but we've got some great graphics and flowcharts and guides in there to help you figure out if your seasonal and part-time workers are going to be counted as an employee for purposes of family. And we have a lot of information there about how to tell if someone is an employee or an owner. And that can be something, we're going to get into that a little bit here today, I'm sure, but that can also be a little bit tricky under family. So we have this all in our employer toolkit page, and it is available in English and Spanish. So it's accessible out there, and it's going to answer a lot of your questions. So regardless of the size of your company, you may be considering a private plan, and that's a very hot topic for us here. So what private plan options are available to them? We have a dedicated page on our website for all things private plans under the Employers tab. So you'll find the Employer Guide to Private Plans, some past webinars, a template for those of you who would like to do self-insured plans, the surety bond form, and a surety bond calculator if you're going to self-insure. If you're looking at being self-insured, you can submit that plan now and we will review it. We are still waiting for the Division of Insurance, for our good friends over there, to give final approval to a handful of private plans from insurance carriers, but we expect that's going to happen pretty soon. We should have some insurance carriers up on our website for you to look at. As long as the insurance plan is going to provide equal or greater benefits as the state-run plan, you can opt to have a private plan. So we should have that up there soon. We'll also have a list of insurance carriers, and so you can go look at those plans. We're going to have a marketplace available for you to go shop those plans. All that said, do employers. It may be a little bit easier for you to work with the state plan. So before we jump into those questions, and I see a lot of great questions there in the queue, we do want to hit on a couple of the big ones that we've got. So we've done a lot of these town halls and presentations, and we know that there are some frequently asked questions. So I want to jump into those. One of the biggest that we're hearing about is how do you count employees, especially if they're part-time or seasonal. So when it comes to counting your employees, we calculate this once a year in the first quarter. And what we do is we look back at the past year and we ask how many people were employed during 20 or more calendar work weeks in the preceding calendar year. So when we get into 2024, what we're going to be looking at is 2023 and asking how many people were on your payroll during a week. So if you have somebody who works 5 days, but it's just in 1 week, we count that as 1 week. That's an employee. If you have somebody who works 1 day a week for 5 weeks, that's 5 weeks. So if you have one employee working during a week for 20 or more work weeks, that person's going to count towards determining if you have 9 or less employees or 10 or more. So let's look at a couple of examples here. So our first 2 employees are seasonal workers who work during 20 or more weeks throughout the calendar year. So worker 1 meets the 20-week threshold, even though those weeks are non-consecutive. Worker 2 meets it, even though this employee sometimes works only a day or 2 in a given week. Remember, once they come in on that day, they've worked that week. So full-time worker number 3, this is a full-time employee who is employed for more than 20 weeks. So this worker is also included, even though they left employment before the end of the year. But let's look at that 4th worker. So 4th worker was hired to replace 3rd worker. So this employee would not count towards the total head count because they only worked 19 weeks of the year. Now, those dates switch a little bit. That full-time worker number 1 works a couple extra weeks, even 1 extra week. That's going to shift the balance, and full-time worker 2 would then have worked 20 weeks. So remember, we're looking at the number of days worked within that week and the number of employees who worked within a single week. All right, so let's go ahead and look at some remote employees. This is where this gets to be lots of fun. So how do we count folks who are remote? It's 2023, right? And so you might have people who are working for your Colorado business, but they are nowhere near Colorado. You might not be anywhere near Colorado, but you've got people working for your business here in Colorado. So we're going to walk through a couple of different graphics here. So we look at the total number of employees. First, when we're calculating your benefits, is it 10 or more? Is it 9 or less? We're going to look at all of the employees who work for your company, regardless of where they work. So if you have 3 people in Colorado and 500 people in the rest of the country, you're still considered a large employer. You've got that above 10, so you're going to have to transmit the full premium. If you have less than 10 people, regardless of where they work, you only have to transmit that half premium. So we look at the entire employees regardless of where they work. But only those employees who work in Colorado are covered for FAMLI. So how do we know whether somebody is in Colorado or not? And I'm sorry, I skipped to a slide that we don't have, but let me answer that question for you. So how do we know if somebody is in Colorado, is a Colorado employee, or is not a Colorado employee? We have a great flow chart on our website to look at all of the different factors, but generally if somebody is working in Colorado or they're based out of Colorado, regardless of where your company is based, they are going to be covered. So here we go. Once again, if you have 10 employees across the country, but not 10 in Colorado, you're still considered a large employer, and we do have several guides on our website to help you figure that one out. So let's move on to another common question that we have. How do we count wages? This sounds like a simple question, but I'm a lawyer and I can't give you a simple answer. So wages can get complicated because it's not just always hourly pay or salaried pay. A lot of times what we're looking at are alternative forms of payment, pays out of vacation or sick leave, deferred compensation. So wages has, generally speaking, the same argument as wages for state unemployment. Now, there's some caveats here because, for example, payment to ministers by a religious organization are just entirely excluded from unemployment, but those are covered under FAMLI. But generally speaking, if you're paying unemployment on wages, you are also going to pay FAMLI on those wages. But we are focused on wages that are received during employment. So some post-employment payments aren't wages. So that's severance, deferred compensation disbursements, pension disbursements, but things that would have otherwise been paid out and employment not been terminated are still considered wages. So that last paycheck, bonuses, commissions, payouts of PTO or vacation, those are all types of wages. So we know there are a lot of very individual cases for businesses that need to know what to define as wages. So we have a full explanation on our employer site. Look for wages subject to FAMLI premiums and under important family matters. That's where you're going to find all of those guides. Another hot topic, and this is a question I just love answering this question. What about new family additions in 2023? So people want to know if they're going to be eligible to take paid family leave in 2024 for babies and new family additions born this year. And the answer to that is yes. So bonding leave, and that is leave to welcome a new addition to your family, whether through birth, adoption, or foster placement. It's available for 12 months after the addition. So if a baby is born today on March 21st of 2023, that baby won't be 12 months old until March of 2024. So that baby's parents will be able to apply for paid bonding leave in the weeks between January 1st, when benefits begin, and when the child reaches that first birthday, that 12 months old. So we're going to have a lot more guidance coming out for this. But also, I just want to answer one other question that I get on this a lot, and I've seen some of it pop up in the chat. This is leave that's available to both parents. So it is not only available to the mother, both parents, whether that it is a birth, an adoption, or family placement, are eligible to take this bonding leave. And I'm sure we'll get a couple more questions on that, and we'll address those as those pop up. But with that, I'm going to hand it back over to my colleague, Cher.
Excellent. Thank you, David, so much. Great content. We are going to get into our Q&A portion of today's town hall. Quick reminder again, if you would like to ask your question live by phone, it's 833-305-1729. Press *3 to be entered into the queue. We will be continuing this series through May of this year, and so our April webinar date is to be determined. We certainly hope in April's webinar we can dig in a little more into the private plan status for you all, and then we also are hosting Facebook Live series. The next one is March 23rd. Information on that April webinar will be available on our website, and if you receive our newsletter, we'll include a mention when the date is confirmed in our newsletter. Also, we have a number of ways you can get in touch with us. So email, social media, and of course, by phone through our call center. Give us a call Monday through Friday, 8 to 4. Can help you with any questions you might have about the program, policy, or technical support that you might need. And so with that, I think we're going to go ahead and dig into some questions here. I think let's go ahead and go to Dave calling in from Montrose. Dave, I'm going to make this phone call live. Can you hear us?
Yes, I can.
Hey, Dave, go ahead with your question.
Yeah, I just had a question. It's regarding if you use the template to upload the wage information. And I noticed that the templates has a lot of columns, and a lot of it's for like third-party administrators and things like that. If I'm doing it directly for my company, can I completely just ignore those fields?
Okay, great question.
Hey, sure, I can take that.
Thanks, Anne. Go ahead.
Hi, Dave. Yes, if you're filing as what we're calling it a single filer, so an employer on behalf of all of your employees, you can still use the same upload format. There's also a PDF document out there that will outline which series are, which columns are required. And things that you will skip are things like the preparer column, because you're not being by a payroll provider. But a lot of the same content around your business and your employee level data will need to be included. Your other option, I don't know the volume of your staff, but there is an in-portal wage reporting mechanism that if you might have a smaller staff, you may decide to key in those rows just for that smaller count of staff.
Thanks, Anne, and thanks, Dave, for the question. This one I will send to David. David, Betsy is asking, can a shareholder opt out of FAMLI?
Betsy, that's a great question, and it is one that we've heard a lot of different variations on. And so what I'd like to do is just take a step back and kind of give the broader picture on what's going on here. So underneath the FAMLI Act, you are either an employee or an employer. And those are really the two categories that we look at. So I know that there are a lot of people out there who you might be a shareholder. There are a lot of people who are owners of S-Corps who technically take a W-2, and for tax purposes, they're considered employees of the S-Corp. But we have a different test. So what we look at is each individual. Are you an employee or are you an employer? And to be an employee, the big thing is that you have to be free from direction and control in the performance of your duties. Or that's to be an employer, to not be an employee. So anybody who is not free from direction and control. So putting simply, if you have a boss who tells you what to do, you're probably an employee. If you are free from control, you are the boss who is telling other people what to do, then you're an employer. So it's not necessarily whether or not you're a shareholder, because we could have people who work for a company who do hold shares, who even hold rather substantial amounts of shares in that company. But what we look at is what's the nature of the work that you're doing? What's the nature of the job? And so if somebody is in there and subject to the direction and control of another, even if they're a shareholder, they're an employee, the business then has employees. It needs to register, it needs to collect premiums, and there's no opportunity for opting out. But if you have, say, an S-Corp, where the only person who works at that S-Corp is the owner, who is completely free from direction and control, even though they're an owner of, or even though they are technically an employee of the S-Corp, underneath our system, they're considered the employer, or in this case, self-employed. And it's not necessarily opting out, they just have a choice on whether or not they want to opt in. So that person could decide to participate in FAMLI, or they could decide not to. If you have a business that does have employees, and you have a shareholder who is free from direction and control, so they're an owner, they are making those decisions on their own for the guidance of where the company is going to go and what's going to happen, they would be considered an employer, and they don't necessarily need to be included in the wage reports of the premiums, but then they would also not be eligible for benefits. So thanks, Betsy. That's a great question.
Thanks, David. And I'm going to send this question to you. Debbie is asking, please discuss how we submit our payments and what information needs to be included.
Thanks, Jer. Hi, Debbie. In order to submit your payment, you will need to complete your wage reports, and making an assumption here that you'll be handling your wage report and payments and not a third-party administrator. The ways that you can complete a payment is after the completion of your wage reporting, you'll get a calculation of what's due. You can complete that payment through the portal with a checking or savings account. You can mail in a check, or if you pay some of your vendors and organizations through the banking system, the ACH credit, you can also utilize that means to make a payment to FAMLI.
Thanks, Anne. David, Lacey would like to know, how is the Colorado Public Health Emergency Program different than FAMLI?
So another great question. The Public Health Emergency Program is very much targeted towards a public health emergency. And so there are different programs out there that have popped up over the last 3 years to help as we're dealing with COVID and during other public health emergencies that could be requiring employers to offer brief periods of paid leave. FAMLI is not connected to any health emergency. FAMLI is just a part of the fabric of Colorado now. So we are a program that is going to exist regardless of any declared public health emergency. And we're going to be offering benefits here for a little bit broader category of things out there. So what we're going to be covering underneath the FAMLI program is those situations where you're recovering from a serious health condition. So if you have a surgery or an extended illness and you can't work, you could be eligible for benefits. We're also going to be offering that for if you need to care for a close family member who is going through that. But in addition to that, there's that bonding leave. and that's not offered under public health emergency leave. So if you're welcoming that addition to your family, you could be eligible. We're also offering some exigent leave for people who are preparing for a military deployment, and safe leave for people who are working to avoid a domestic violence situation. And so the family program is enduring and broader than the public health emergency, which is really just some brief periods of paid leave while there is a declared emergency.
Thanks, David. We'll send this one to Tracy. Tracy, how will claims be monitored for fraud with the disconnect between the Department of Labor and employers?
Yeah, thanks, Cher. So we will have a robust fraud detection and monitoring system in place. We will be looking for fraud in a variety of different manners, including at the individual claimant stage, at the provider stage, and also we'll be looking for trending and patterning around leave requests and provider verifications. Several other things will be incorporated into that as well. But without giving too much information away, I can just say that, yes, we will be working with fraud vendors, and we'll have lots of controls in place.
Thanks, Tracy. David, back to you. Jill is asking, we're out of state and have 3 employees in Colorado. Are we required to participate?
Yeah, Jill, so the answer is going to be probably. But I would suggest you go to visit our website, and we do have a great flow chart for what we call the localization of employees. So the question here is, are your employees considered to be Colorado employees? And if they are primarily working out of Colorado, they're based out of Colorado, then they probably are Colorado employees and would need to be covered under that program. But you can look at that. There are some exceptions, and there could be an exception there that those employees would fall into. So it's very fact-specific. And without knowing the nature of your business, the nature of the work, and the particular setup, it's really difficult for me to give you that guidance. So go check out those resources we have online, walk through the flow chart. You can look at the criteria, and that should give you a little bit more guidance as to how it applies in your situation. But generally, yes, if you do have people who are working in Colorado, they're going to be Colorado employees, and they would need to participate in this program.
Thanks, David. Just a reminder, the number to call in and ask your question live by phone to our panel of experts, 833-305-1729. *3 gets you into the queue. And Anne, we're going to send this one to you from Gail. Does the employer still need to set up an account if they have a TPA? If they have set up the account already and are deducting the premiums and paying the quarterly premiums for us?
Thanks, Cher. There's 2 ways that this can be completed. If your TPA has already completed the family registration, are set up with family, and then completing those activities, there's no action needed for you right now. And then if there's also examples where if the TPA hasn't quite registered yet, you still have the ability to complete your registration. And then when they complete their registration or their bulk file process, they'll go ahead and establish that relationship between your client, your employer, and the TPA account. I think I covered that. Thanks, sir.
Thanks, Anne. David, Helen is asking you to please address self-employed with no other employees other than ourselves.
All right, so Helen, if you are self-employed, or if you're in a, say, an LLC or an S Corp, and there might be 1 or 2 other people who we go back to that same question is, are you free from direction and control? And so if you're self-employed, then you're self-employed. If you're in one of those small companies like the LLC with, say, 3 members, all of whom are free from direction and control, then they are all self-employed. And what you can do then is you have a choice. So you can opt into the program. So if you do nothing, you're fine. You don't have to participate. You don't have to pay premiums. But the flip side to that is you don't get any benefits. And so I know we've been getting this question a lot from a lot of people who are really looking for a way to avoid paying those premiums. But I do suggest you take a long, hard look at it, because ultimately it's 0.45% of your wages. And we have some guides for how you calculate that if you're self-employed. That's not a lot to pay for the protection of being able to get 12 weeks worth of income if you're unable to work. And if you're self-employed and you don't have any other kind of safety net, this is a great program for you. But if you decide that that's not for you and that's not the course you want to take, you don't have to do anything. If you do want to participate, you can register. You'll be registering later in the year, a little bit closer to 2024, and then you will be eligible for benefits. Once you register, you have to commit to staying in the program for 3 years, but it would allow you then to have access to those benefits. But it's your choice. You can do nothing, or you can opt in and register.
Thanks, David. We're going to stay with you here for the next question. In determining annual salary, does FAMLI consider all earnings, including a bonus?
We do. So if it's earnings paid out to an employee, or whether it's categorized as a bonus, as a commission, as hourly wage, as salary, we factor all of that into the calculation of the average weekly wage. So all of those forms by which an employer transfers something of monetary value to an employee in exchange for the labor performed, we are going to calculate that as part of the wages.
Thanks, David. We're going to go to a live caller, and we've got Melody calling from Craig. Melody, I'm bringing you on live. Go ahead and ask your question.
Hi, I'm wondering, I've already registered our employer on the website, and I'm wondering how many users I can enroll.
Tracy, would you like to take that question? I'm sorry, or Ann?
Sure. As I understand it, you're saying like if you've got yourself registered as a user on the account, and then you have some coworkers that you need to include.
Yes.
Have 2 additional primary admins, 2 additional editors, so those roles would only be allowed to do wage reporting and payments. And then there is one other role type that's a contributor, and they have a slightly less feature functionality in the portal. So like just a full quantity, you could have yourself and 6 others, but just depending on what type of work they need to do and interact with the portal will depend on what type of role you assign them.
Okay. Is there a number I can call? Because I'm registered as the controller. I would be the one just checking in on it, but my accounts payable coordinator would be the one uploading the reports and making the payment. And when she got the link, I added her to it as an administrator so she can upload reports and pay the bills.
Cool.
And it didn't prompt her, it didn't put her into my company. It wanted her to set it up again. And when she did that, it told her that company is already enrolled. So we're having an issue setting up that second user.
That is interesting. It's the way you explained it. I was tracking and felt like it should operate that way. The screen's really small on here, but we've got I think it's 1-866-VO FAMLI. The team's there Monday through Friday, and we can dig into those individual details a little bit more to see what the hiccup is between you and your accounts payable individual.
Excellent. I'll give that a shot. Thank you.
Awesome. Thanks, Melody.
Okay, let's see here. This might be an Ann question. Ann, does your team offer the ability to test enrollment files for accuracy? Can their files be reviewed before reporting them? And how are errors determined? If an error is detected, what's the procedure?
All right, let's see here. You can complete and prep your file. What we do encourage, I think, towards the end of each of the spec guides, we have a small section of the specification guides. We do have a small section outlining how we recommend you test it. We do not testing environment. So what typically, each file is a little bit different, but typically we will ask that you complete a small sample, and that way you can receive the confirmations and or the errors. As far as how the errors are determined, it does depend on the data being relayed. Along with that same specification guide, we do outline some of the errors that can be received, and then what the kind of the action step would be. If that's not working, we can try to see if through the call center team we can support a little bit more, but hopefully that'll be a good start to get you going on completing some test enrollments.
Thanks, Anne. David, over to you. A question from Marina. Can businesses with one employee not participate in FAMLI?
So the answer to that question, Marina, is probably no. But it goes back to that whole question on, is somebody an employee? So let's say you have a business and you have hired one person who works under your direction and control. They are an employee. You do have to participate in FAMLI. Now, because there's less than 10 employees, the premium is only that 1/2 portion, which can be deducted entirely from the employee's wages. So it's 0.45%, and that can all come out of the employee's wages. But there's no threshold in our system that that excuses compliance with FAMLI based on having only one or two employees. And I'll also just note here that the same is true on if they're family members or based on age. So if we have, if you've got children who are working for you, your children who are maybe 14 or 15, in some circumstances that's allowable, they would still be employees. You still have to participate in FAMLI. So the only thing affected by the size or the number of employees is the percentage of the premium that's paid. But if there is an employee, you do have to have that participation. And I did see another question come in here that I think is kind of along the same lines. It's from Jamie. If you're a controlled group, do you have to have this across all companies if those entities are under the 10-employee threshold? So again, if you're under the 10-employee threshold, you still have to participate. The only question is how much premium do you have to pay? Do you have to pay that employer share, that 0.45%, or is it just the employee share? We do have some guidance in our rules on joint employers, and this is a situation that we are still looking at, and we are still working on the rules, though. If somebody has, say, an umbrella with separate entities, with how do we calculate that? Because on the one hand, if you have truly distinct entities, we want to make sure that you're being categorized properly and that you're paying the appropriate amount of premiums. But on the other hand, we do want to avoid people who maybe just have one business but have broken it up into separate entities to try to reduce their premiums, because that's not fair to the employers out there who are doing this right. So that is something that we do need to look at very specifically with how is that company structured, and something that we will be looking at as those registrations come in.
Thanks, David. Let's go ahead. We'll go to a live caller and return to our online questions. We have Lorena from Denver. I'm going to bring you on live, and you should be live to ask your question.
Okay. I just had a question about the current Healthy Family and Workplace Act that is currently in place, which is the paid sick leave. Does the family insurance replace HFWA, or do we need to provide family the paid sick leave in addition to the family insurance?
It doesn't replace it.
Go ahead.
Oh. Yeah, sorry, Lorena. I was so excited by your question, I jumped in before Cher could tell me to answer it. So it's a great question. It doesn't replace that paid sick leave. So those are both going to operate at the same time. Our assumption is that people are usually going to be taking that sick leave before they come into the family program, because that is for a shorter period of time. The family program does not have really any significant limitations on the small amounts of leave that you can take, but because of the administrative work involved in applying for it, we are expecting that this is going to be something that's going to be used by people who are out for a longer period of time. So we expect that people are going to come in, they're going to take that, what we call the HFWA, the Healthy Family Workplace Act leave, for the shorter periods, and then only come into family once that's exhausted. But yeah, they don't replace each other. They should be working in accordance with each other.
Thanks, David. Thanks, Lorena, for the question. Quick time check here. We have about 20 more minutes. If we don't get to your questions, we will send up a follow-up with today's webinar recorded, and there's a pretty good chance the answer to your questions available on our website. We have a whole host of resources and content, including FAQs, at family.colorado.gov. Let's see here. I think we will send this one to Tracy. Question is about bereavement leave. Does family provide any benefits for bereavement leave?
Thanks, Sharon. Thank you, Monica, for this question. So right now, the way the statute is written, we do not provide benefits for bereavement leave. It's certainly possible that if somebody is having significant impacts that make them incapacitated by their health following an unexpected bereavement, they may be eligible for some kind of leave for a mental health condition, but not for bereavement directly.
And Tracy, another one for you here. If you've already submitted a self-funded private plan application, but it hasn't been approved, can you withdraw that plan and switch to a fully insured plan?
Yeah, you certainly could do that, Shelby. If you reach out to us either through our contact center or through email, we can assist you with that process.
Sticking on private plans for a moment, Tracy, Liz is asking how long can an employer expect for their private plan exemption to be reviewed and decided upon?
So we currently have several carrier plans that are in review with the Division of Insurance. As soon as those plans have been certified by DOI and approved by FAMLI, you'll be able to access them through our website, and then you'll know that those plans are approved. From there, the process will go fairly quickly.
Thanks, Tracy. Debbie is asking for FAMLI as a 501c12, a local small water district considered a government entity. It's reported as such on the quarterly federal 941 form.
Oh, that is a very specific question, Debbie, and I very much appreciate it. So what we're trying to figure out here is this a local government that is allowed to opt out, or is it not? Small water districts typically are going to be. But again, we don't necessarily look at the tax classification. One of the key indicators for me at trying to figure out is this entity actually a local government is who runs it. If you have a board or some form of administrator that is either elected or appointed by an elected official, then they are themselves an official, and that is typically going to be an indicator that it's a local government. I would assume in this case that the water district is going to be a local government, but I would check that, make sure that you're being run by people who are subject in some way to a democratic process, either by election or by appointed by an elected official. And I just want to put a caveat in here that if you have a counsel for that water district, it's probably a good idea to confirm that with your attorney, who's very familiar with the specifics that would have created that water district and can give you that more specific advice. But I would, based on what you've said, it does appear to me that this is going to be a local government.
Thanks, David. Anne, we have a few technical questions for you. A question from Erica. Will there be a bulk upload option like unemployment insurance, and will there be FTP upload options?
Thanks, Chair. We do have a file bulk upload option on the portal. You can provide it to FAMLI through either an XML file or a CSV file. I believe unemployment insurance uses a slightly different format, something called ICESA. FAMLI is not supporting that at this time. And there is not an FTP site to upload. So you would interact through the portal with a file upload. A second alternative is you can request API access and work with your team to build a JSON API to complete uploads.
Thanks, Anne. And another functionality question here. How do I edit an incorrectly entered filing for an employee?
If you've already completed a wage report submission and have like incorrect values for the employee, you can complete that as an edit by resubmitting the same Social Security number and the corrected wages, and it will essentially update and replace the previous provided data for that given and for that given quarter. Yeah, and then I will get into more specifics of what that particular edit needs to be. That's probably the best guidance I can give at this time.
Thanks, Anne. David, Diana is asking, if you are a local government and have no employees, do you have to opt out?
Well, so you're a local government, so you do still have to register. And once you register, then yes, you want to tell us that you've opted out. The alternative there is that you're going to be still registered as an employer in our system, and you're just going to need to, for the next 180 days, be reporting to us that you don't have any employees. So administratively, it's going to work just a lot faster and it'd be a lot easier to transmit that information that you are opting out. So you give us that information, then we know, and that buys you 8 years before you have to come back and retake that vote.
Thanks, David. Tracy, question here. What are the state required notifications for this program when an employee is requesting leave?
So if you have an employee that's requesting leave and maybe they've come to you for something like FMLA, we would require that you do notify them that they may be eligible for paid family and medical leave, whether that's through your private plan or through the state's plan. As far as them making notifications to the state, they would need to reach out to us to open up that claim, which will be done virtually through our portal. We would then also provide notice to you as an employer to let you know that you do have an individual who's requested leave. We'll let you know the anticipated start date for that leave and what the employee is requesting as a return to work date. We'll also keep in touch with you throughout the process and let you know when you can see your individual's leave as approved.
Thanks, Tracy. David, William is asking when the first pay period deduction starts.
Thanks. That's a great question, and it was January 1st of this year, so a couple months ago. And that's really important to note because premiums are supposed to be deducted from employees' wages as they're earned. And so starting January 1st, employers were allowed to deduct that employee portion of the premiums from their wages. But really important to note here is that deduction doesn't actually have to happen, right? Because an employee or an employer can decide to cover that for the employee. So an employer can go out there and say, you know what? We're not going to take any money out of our employees' paychecks. We're just going to pay the premiums for them. And so employers might have a lot of different reasons for doing that, to stay competitive in the job market out there, or for some sort of collective bargaining purchase. And so if those deductions didn't happen starting on January 1st, and if they're not happening now, our assumption is that the employer is going to pay that full premium on behalf of the employee, and you are not allowed to make retroactive deductions. So if there's an employer out there who hasn't been making any deductions, and you're planning on making that deductions, you weren't planning on paying the premiums on behalf of your employees, you want to start working on that right away. And do know that you can't go back and make retroactive deductions. That would be an improper deduction. It's going to be a violation of both our rules of procedure and some of the wage laws that are going to be enforced by the Division of Labor Standards and Statistics. So if you do make retroactive deductions, you could be facing some penalties. So very important to note, those deductions should have started. You can't go backwards, but if you are planning on taking those deductions and you haven't been, you want to start that right away.
Thanks, David. I don't think we have, we covered it broadly in our slide deck, questions about preparing for childbirth. So if a covered employee has a baby in December 2023 and their maternity leave will span into 2024, can they apply for 2024 family benefits?
Yeah, absolutely. So the way this is going to work is if you are entitled to 12 weeks of leave for bonding anytime during the first year after that addition to your family. So if you have 12 weeks within that first year after the addition to your family that falls within 2024, you're eligible to take that 12 weeks of leave. So practically speaking, we're coming up here on the deadline, so to speak. So really after about April 1st, if you have that birth, adoption, or foster placement, there will still be 12 weeks available in 2024 within that first year. So you would be eligible for all of those benefits. So if there's somebody who they have a child in the later half of this year and they take some variety of leave that is available to them in this year, they're still going to have that eligibility to take family leave once it becomes available on January 1st. And as long as that 12 weeks and the first year after that addition line up, they'll be eligible to take those full 12 weeks.
Thanks, David. A couple of questions generally around out-of-state employees. So let's start with if a Colorado resident is employed with a company in another state, is that company required to participate?
And again, probably. So we do have good guidance to help walk through the specifics of this circumstance on our website. But in most cases, yes, if somebody is working in Colorado, even if the company isn't in Colorado, they are still considered a Colorado employee. The company would need to register. We're going to look at all of their employees nationwide to figure out what the premium is going to be, but the premium is only going to apply to those employees or employee who is in Colorado, and those are going to be the only individuals who are eligible for benefits.
Thanks, David. Let's go to either Anne or David on this one. How should we report employers paying the employee portion of family?
I think that's going to be a tax question for me, so I'll let you off the hook there, Anne. So we are still looking for guidance, actually, on that from the Department of Revenue and from the IRS. But for our purposes, for family purposes, if the employer decides to pay the entire premium, so like I was saying, they don't have to deduct those wages from the premiums from the employee's wages. So if the employer decides to do that, that additional money that they are putting towards those premiums on behalf of the employee don't count as wages for the purposes of increasing the premiums that they're going to pay. So we don't count those as wages. As far as the Division of Revenue's position on that, I would love to provide you with guidance. The Division of Revenue, though, doesn't really like me telling people what they should do. So talk to your tax professional. My understanding is that in most cases that's probably not going to be the case, but definitely confirm that with a tax expert who can let you know the Division of Revenue's position on that. But for purposes of our calculation of wages, any portion paid by the employer does not count as wages that would then increase the premiums.
Thanks, David. Quick time check. We have 5 or 6 more minutes. So we'll continue to move through our online questions. You can still ask a question by phone, 833-305-1729. Let's go to, this one can be for Tracy. Tracy, Sarah is asking, in regard to private plans, do you have any idea what maintenance fees will be?
Yeah, hi, Sarah. It's really going to depend on how frequently we're needing to do appeals on behalf of your organization and whether or not there's going to be a big lift on the state side to help your vendor manage your claims. So to be determined right now, but it will be based on usage and utilization of state resources.
Thanks, Tracy. I just want to make sure our moderator didn't accidentally end the session early. Since we have a few minutes, it looks like some folks cannot hear our audio anymore. Let's try and go to another question, and hopefully we get the audio back. Let's see. How about seasonal employees? David, how are seasonal employees handled?
So great question here in Colorado. Because we've got between agriculture, between skiing, between outdoor summer recreation, we have a lot of seasonal employees here in Colorado. So what we're going to look at first is for determining for counting. So what we look at is that did they work within 20 weeks, in which case they count as an employee. And so if you have 10 or more people who are working in 20 or more weeks, then even though they're seasonal, we still count them as an employee, and that helps us figure out the size of your company. But for seasonal employees, how are they going to be handled for other issues? For premium payments, just like anybody else, part-time, they're still going to be paying premiums on their wages. It's just only going to be, of course, paid while they're working. For benefits, I'm going to answer for you what I can now in the minute or two that I have, but I would strongly urge you sign up for our newsletter, pay attention. As we get closer to 2024, we're going to have some more webinars and information directly focused on the payment of benefits. And I imagine that this is going to be a big topic out there. But generally speaking, if somebody goes out on leave, so they filed their application, they are employed, they want to take leave, we're going to issue a determination of how long that leave is for, and they're going to get that leave. So let's say they've got 4 weeks left of the ski season, and they come into us and they've got a doctor that's saying this person is going to need 6 weeks worth of leave. If we approve that, they're going to get 6 weeks worth of leave, even though their job is going to terminate at the end of that 4 weeks. Now, it gets a little bit more complicated when we start talking about intermittent leave, and that's all something that we will probably need to dedicate a whole webinar for. And believe me, there are some people on this chat from our policy team who could probably spend 4 or 5 hours walking through all the permutations of that. But generally, seasonal employees are going to be entitled to benefits and to leave as long as they are employed at the time they request that leave, and they will be able to take continuous leave throughout that period. But again, a lot more details on that, and we're going to have some specialized communications as we get a little bit closer to 2024. So if you do have seasonal employees, sign up for some of those webinars, and I look forward to doing a deep dive into that topic for you.
Thanks, David. I think we have time for just one more question. Let's go to Sydney from Durango, who's calling in. Sydney, I'm going to bring you on the line. Go ahead and ask your question.
Hi, guys. Thanks. I actually have a two-parter here. We are wondering if you have a sample report that we could look at for what the quarterly wage reporting will look like. And also, is the premiums going to be broken down by employee and employer for that reporting?
And
I'm sure I can take that. Yep. As far as part one, there are some sample examples on the famli.gov site, both on the TPA page and then on the employer page. And some of the, there's like these purple banners that you can expand that asks about how to submit your wage report. There's not a ton of sample rows, but there are some. And then for each wage report, there will be, you will report by employee level wages and then employees like summary level data as well.
Thanks for the call, Sydney. I do think we are just about out of time. We will send the recording of today's town hall out to all registered participants. On the slide, you have, again, our call center number and ways to get in touch with the division. And again, stay tuned for the April town hall, date to be determined, where we hope to dig in a little more to private plans. So thank you so much for participating. We hope to engage with you next month. Thanks so much. Bye-bye.